All right, so we're going to go over a really easy way to figure out what the next candle is going to be. So we're going to look at the previous candle as well as where the current candle closed. All right, so we'll play a couple of these candles out real quick. Let's get some context. Okay, so if I use this just closed. Okay, we now compare it to the previous candle and we look at the low and the high of the previous candle. Did this candle close outside of the previous candle's high or low? It did not. It wicked it, and we certainly cleared the liquidity below it, but we then closed back within the range. All right. So this is a time where we would be holding off. We want to see a new candle. And now what do you get? You end up with a candle 3 because we get this sweep here, close back within the range. So this is your candle 2. Now we're expecting the candle 3 after, which we get. And then what happens with this candle 3? We close above the previous candle's high. And when we close when we close above this previous candle's high, we can start to expect what the next candle is going to likely do. Not guaranteed, of course, likely do. So with this, I would expect the following candle to be bullish because we closed above the previous candle's high. And you get the expansion candle 4. All right. Obviously, we close above the high of this. So I would be remaining bullish. We close above the previous candle's high. So I'm still bullish. And what happens here? We created a doji. We swept the candle's high, and then it went back within the range. So again, this is where I am no longer bullish. I'm also not bearish because we didn't close below the previous candle's range. I'm in between. This is when I'd start taking context into the situation. I'd be looking at this fair value gap that got created here. And I would start thinking, okay, maybe we're going to be retracing for another continuation higher. And let's see what happens. We get another bearish candle. We closed within the range of this candle, right? We didn't close below. So we can't suggest the next candle is going to be bearish. What did we also get? We got a strong rejection off the 50% of this fair value gap. Okay. So this is the market tipping its hat to you. It's telling you we're still wanting to climb a bit higher. Again, we get another low candle back into the fair value gap. Do we close below the previous candle's low? We do not. We also don't close below the previous candle's high, so we certainly can't be suggesting next candle is bullish. Also not going to suggest next candle is bearish because we didn't close below the previous candle low, and this fair value gap we're continuously respecting. We're not able to push and punch through it, okay? So we're still waiting. We're waiting here. Okay, so what do we get? We get another push to this fair value gap and another rejection. Do we close above this candle's high? No, we do not. We swept it, and then we came back within range. Once you stare at charts for a long time, you would be expecting the following candle to be bullish here. But based off of what I am teaching you in the simple rule of did this candle close above or below the previous candles, the answer is no. So we are waiting. What do you get? Bullish candle. We close above previous candle high. So we will remain bullish. We also got this beautiful rejection from the fair value gap, which we would be suggesting is confluence to our already bullish bias. And what do you get? Strong continuation candle up. You close higher, and you would be continuously bullish here. So you're constantly looking at what is the current candle doing and how is it comparing to the previous candle. Time is fractal, so you can do this on any chart. You can do this on the weekly, the monthly, daily, 4-hour, whatever you want to do as a way to predict the next candle. Keep in mind the lower time frames you go, the more noise you're going to get. I'm not suggesting anybody go jump on a 1-minute chart and start applying this logic. You certainly can, but expect lots of noise. So we'll now jump into the charts and we'll show some more examples. Okay, so here's the first example. We'll go to Euro USD. This is, if you would like to follow along, February 7th. So we'll use the exact same logic that we just went over. We are again on the daily chart. So how did this candle close? Well, we closed below the previous day low. So we would expect a following bearish candle. We are somewhat in chop here, so we would want to be careful. But let's see what happens. So this is kind of an interesting candle. This was a Friday. So this Monday candle, we actually got a gap down that ended up a bullish candle. Slightly odd. So we can't do much with this candle for the following day. So we'll just wait. So what happened here? This candle, did we close above the previous day high? We did. So we will expect a continuation on the following day. We did get bullish, not necessarily continuation. We closed right at the high, so we're going to have to wait. We get a continuation candle here. We close above previous day's high. So I'll expect another continuation. Again, we're still chopping. So we could sit here and just chop out, but we'll see how it goes. We do get a slight continuation. We close above previous day high. We also haven't cleared that liquidity, which it looks like it wants to do. So I would expect next day to be another bullish day. And we get a bearish doji. So I will wait because we stayed within the previous day's range. All a doji candle is consolidation on lower time frame. So if you were to go into a lower time frame, the 5-minute chart, you would have literally just gone back and forth and you would have seen barcode tip price action for that entirety of the day. This would have been a very bad day to be trading. So let's see what the next candle does. And we do get a push lower. We close below the previous day's low. So I could expect the next candle to be another bearish day, keeping in mind here that we are in a bearish fair value gap. I'm sorry, a bullish fair value gap. Mistake. And we are respecting it. So while, and this is why it's really important to be taking into context, you can't just take this rule and apply it blindly everywhere you go. Did we close below the previous day's low? Yes. So we could expect another bearish day, but we just have to keep in mind that we're also got a rejection out of this bullish fair value gap. So we'll see what the next day does. And we do, in fact, blast through it. And we invert that. But we'll see. So we close below previous day's low. I would continue on with this. Another bearish day, but we should see. And instead, what do you get? A large bullish candle. We close above the previous day's high, as well as, making actually so very bullish. I would be expecting the following day, I would be looking for longs. Albeit we are trading in this previous consolidation, something to be careful of. In my mind, what we would be seeking is probably some of this liquidity up here. So I would want to be. So I do believe next day we would be long. And of course, now we are just going to sit here and chop. So we stayed within previous day's range. We're going to hold off. Same thing. We're going to hold off. Same thing. Although we are getting bullish again, we did not close above the previous day's high. You can see we're really trying hard to clear this liquidity, having a tough time. But we are going there. So I mean, ideally, my bias would still be bullish here, but applying our rules, we did not close above the previous day. Same thing, we are sitting here chopping day after day after day, we are chopping. And now you get a drop, okay? So we get a big displacement candle down, we close below the previous day's low. We also get an order block here, following day bearish, which we get. I would continue on. We close below previous day. Although, what are we in? We're in kind of another one of the areas that we like to reverse in, as seen here. So we need to be careful, but bearish, see what happens. And instead, we get a lot of support here. Very bullish candle closing above the previous day. So I would absolutely be looking for that final push through. Let's see if we get it. This is why patience is very important. We've been sitting here chopping. All right, so this is actually an example of when you should not be trading. You want to see, ideally now I want to see it close above this, and we would start seeking highs. But with all this chop, a lot of fake moves, you want to be careful. But let's continue on. Closed above previous day high. Let's look for another bullish candle. We do get that. We're starting to absolutely seek liquidity. We did not get it. So not only am I bullish, but I'm very bullish because we still need to go pick this up. Where would I be looking at some resistance? You got a little bit here. Really this whole, you can see at the 50%, we get this order block down. So yeah, I expect clear, hit this, get some rejection, but who knows? We did see a lot of accumulation here. And when you get a lot of accumulation, and again, we're on the daily. So this is, it started back here November, and here we are in March. So a lot of chop. And when you see a lot of chop like this for extended periods of time, it is not uncommon to see large moves. But we also need to be careful of another thing, which is accumulation, manipulation, distribution. You got distribution. We've been accumulating. Here's the high of the accumulation. So this could very well be the manipulation, clearing this, running in to the tension in here, and then getting that retracement. But we're predicting at that point. Let's just see what happens next. Next candle will remain bullish, and we absolutely get that. Strong 3-day in a row expansion after a lot of consolidation. We actually close above the 50% here. Same thing. So I would absolutely continue bullish here. Next kind of area of potential tension, this little piece right here. Let's see what happens. And again, we get a strong rejection off that little piece. We don't even close above that, although we did close above the 50%. So we didn't close above the previous day. This is potentially where we start looking for some retracements. And we're going to hold off on another candle. Okay, so we are continuing to attempt to push. The problem is did we close above the previous day's high? We did not. We're still getting rejections from this bearish fair value gap. So we'll continue another candle. We're still staying in range, still continuously getting rejected from the fair value gap. Although there really aren't enough sellers coming in yet to see that retracement down. So still bullish, but based off of, our rules here, we're going to hold off, wait for another candle. And there you go. After a few days of battling, you get the breakthrough. Do we clear? We do. We clear the liquidity up here. We invert this, continuously looking at the bullish trend. So what's next? What do we do? Well, we're not sure. Maybe this is all the liquidity we needed for some move down, or we kind of continue. I mean, we've been on this move down. Now we're sitting at the 50% of the range, roughly 50%, right? Almost exactly 50% of this range. Okay. So a lot of indecision here. Not really sure what the market wants to do. Swept these highs. We did close above the previous day high. So we'll just suggest the next day is going to be bullish. But we are getting and seeing rejection from this liquidity. Still inside the previous day range, so we can't do anything with this. Now we close below previous day low. But where are we? Sitting right on, we closed on the 50%, right near the 50% of this inverted fair value gap. So based on the rules we've been going over, we should expect another bearish candle, but because we are sitting in this inversion, who knows? We've been really bullish lately. We might start for another run up, which is exactly what it looks like it wants to do. We try to push down again. We're not able to clear and sweep the previous day low. Instead, we get more buyers coming in, and now we are looking at going the other direction. Did we close above the previous day high? No, we didn't. We also swept it and then came back within the range. So we're not sure what happens after distribution. Accumulation. So we could expect potentially this to accumulate for a little bit. Or again, ideally, we see some retracement so that we can get on side for a trade long. But we should, here we go, looking like this is where we might want to be reversing. Do we close above the previous day high? We do. So we would expect a bullish day, although this is an area we have continuously been getting rejected from, but not a whole lot of sellers stepping in. So let's see if we break through. We expect bullish. We get bullish. We close above the previous day high. So we'll do another day of bull. But we get another rejection off this line. So we get a strong rejection here off of this. A lot of battling. Again, this is kind of that chop. After a big distribution, the market just, chops people out. We're continuously getting support here on this. We did not close below the previous day low, so we're undecided. We're sitting in between this range. Perfect. We closed below previous day low. Interestingly enough, we also find support again right on the 50% of this. Yes, we wick through, we clear these, but we are still. So after accumulation, what do we look for? Accumulation, manipulation, distribution. So if we're expecting to go higher, this technically, although seemingly looks a little bit early, although we are on the daily, so it could be. This could have been the manipulation, getting everybody to try and go short. We clear the lows, but we should see. Again, we did close below the previous day low, so based on just kind of showing out these rules, we'll call the next day bearish. But again, once you're actually taking in context, any smart trader would actually. So we do get some bearish. We close out of this, so I'll get rid of that. Close below what made the high. We're closing right at the previous day low. So again, we're going to want to wait. This could be the manipulation to the move higher. We're not sure. Stay going down, but we are not closing below the previous day low. Still unsure. Same thing, staying within range. Although weak, certainly weak. Day after day after day of weakness. Buyers are doing their best to keep it up, struggling. Now, today, what do you get? The drop down. We close below previous day low. We are also now sitting in this large bullish fair value gap. So let's see how we react to this fair value gap. And we get a fairly strong reaction. Remember, this is the 50%. So if we're really bullish, we actually don't want it to hit this. We would love for it to stay above here and start pulling off. So let's see what happens. Did we close above previous day high? No. We're close. And we certainly did get that nice rejection from the fair value gap. But based on the rules we're following, we're just going to wait. Okay, now you get bullish candle. We close above previous day high. So we'll be bullish tomorrow. And we don't get it. Confirming the accumulation. You do not want to trade accumulation. This is where you blow accounts, whether it be a high time frame, well, really lower time frame, but because a higher time frame, you can still find trades, certainly in these days, but it's just harder. So let's see what happens. We're just chopping out. We're staying within the previous day range. Same thing. Okay, now we're trying to break out higher again. We have continuously been getting beaten down by this old area, which saw a large move low. Again, when you see a large move low like that, you know that there's going to be a lot. This will be a battle. I would expect another battle up here. Although who knows, with all this liquidity, you may actually see a blast through. But let's wait. Let's see what happens. We are getting nice rejection off this fair value gap. We closed above the previous day high. So next day, we will expect bull. And we finally blast through, leaving a large fair value gap, which hopefully we'll retest later. We are now getting into this area that I had suggested before. So previous accumulation, which I'm going to actually call something like this. As you can see, getting some pressure here. Although that large candle, I would love to see just blast right through. We go above the previous day high, and we don't. We're getting rejection here. Closed within range. Very well, just could be a retracement back up, but we'll see. We'll wait for another candle. We need the market to tell us a little bit more. Okay, so next day, get a big gap down. We're trying to push up, really struggling, getting pushed down. So we're going to, although we did close technically below the previous day low. So we could make the argument, sure, next day low, or next day a bearish day. Although it really doesn't match the particular market structure unless this was a reversal. Doesn't look like it. We're staying in range, getting a little bit of rejection here. More rejection, staying within range, and we blast right through it. We pull all that liquidity. Now what would we be seeking? Now market wants this, which also happens to run into this old accumulation here. So following day, what do we think? I'd argue another bullish day, which, yes, we blast through, pulling up all that liquidity. We are getting the rejection from, like I said, this old accumulation that happened way back here. Let's see what happens. This should be red. Rejection at the 50-ish, because that's a weird range back there. Now we're low. We close below the previous candle low. So we could argue the next day is low, but we're also is bearish, I'm sorry. We're also sitting inside this fair value gap, which is bullish, so conflicting. And the fair value gap won out. Looks like we are going to try and break through that previous accumulation. I'm just going to get rid of that because we close above previous day high. So we'll be bullish for the following day. And instead, what are we starting to get? Like I said, what happens after distribution? Accumulation. We need to build orders. Looks like it's kind of doing that. Let's see. As we see the following day, we're staying in range, building orders right around the 50% of the previous accumulation. A lot of people buying and selling here. And we get the push through, which is beautiful. That's what you want to see. We invert, although we don't actually invert this because this was not a fair value gap. I'm sorry. That was just accumulation. So we are absolutely bullish. We would continue on bullish. And that's how we would look at Euro USD. So the beauty about this when looking for the bias of the next candle is time is fractal. It works everywhere. So if I were to drop down to the hour, what is a good fractal that moves with the hourly? It's the 5-minute. And actually, technically, the daily as well. So that's a good kind of 3-time thing to be using is the 5-minute with the hour with the daily. So if I'm looking at the hour, this candle actually completely in gold. We closed above the previous day high. So I will expect the following candle to be another bullish candle, which we get. We then close above the previous day's high. So I would expect another move higher, a large one. Again, after large moves like this, I mean, yes, I would I would be expect another bullish candle. You just want to be careful. Like I said, even with the daily, when you start getting, 3, 4, 5 daily pushes in a row, you could start looking for a new phase of price where you're looking for some of that accumulation, which you want to stay away from. So we have a big distribution here, right? Let's see. So I would expect the next candle to be bullish again, which we get, although we're losing a little bit of steam. Let's do another bullish day. And this is where you start to see it die out a little bit. We could start entering some more, either a retracement down into the fair value gap here. Either accumulation or, a retracement back before the following continuation. So I'll show you even how to form a trade out of this. So we'll wait. We're getting nothing here. We need more time. Market's not telling us much. So this is actually midnight. So we're starting to approach London. We should start to maybe see some movement. We're not closing above the previous day's high or low. And then we get this. Okay. So we're on the hourly chart still. We closed below previous day low. Actually, previous hourly low because we're on the hourly chart. We actually closed below the previous 2 hourly lows. So I am going to expect the following hour will be bearish. Where would we seek? We'll seek liquidity here. We'll seek liquidity here. And then again, this whole kind of fair value gap area, you could argue is all liquidity. Not argue, is liquidity. So what goes well with the hourly? Like I said, the daily. And then when you're going to the smaller time frames, the 5-minute. So if I believe over the next hour, we're bearish, hopefully seeking some liquidity here. Let's go to the 5. This is the overall kind of um, process that you want to be taking. So here's the liquidity. Again, there's also more down here. I'd actually just use this, some double lows. So how do we frame a trade? Well, you could, we're getting really close to even making the argument you could enter here. And why do I say that? Because one, I've looked at the charts for years, many years, and this is just bearish. You're getting this bearish push, lots of fair value gaps. You're respecting, certainly respecting the 50% of this move to even going lower. You're closing below the thing that made the high. And then on this, you push up, you try for another run, you fail, and then you're continuously pushing lower. So this is looking bearish. I'm not going to enter a trade here because it's not, I mean, technically we closed below what made this high. So if you are splitting hairs, you technically could, but I want to wait just based off of the model that we're using. Let's see. We stayed within the previous candle's range, so we're, and what happens, unfortunately, we miss out on this trade. We blast right through it. And like I said, I mean, ultimately, if I had taken the trade where I felt like we could have, yeah, I mean, it's a 1.2. It's really not even a great risk reward. There's a lot of 1-to-1 traders out there. So, I mean, you certainly could have. Not ideal risk to reward on this. Ultimately, we do go sweep that liquidity. We then get a strong rejection off of it. So, taking context into consideration, yes, we closed below the previous day low, but we got a strong rejection off of the liquidity. And you never know. When we go get liquidity like that, the next question is, well, do we go get the next liquidity? Or is that all we need before making another push higher? So I would expect the following hour to have bearish moves in it, going down to seek more liquidity. So we'll go down to the 5 minute. And what you actually got is some fairly strong rejection right on these lows. And if we were to leave this, you hate to see this. When you're trading in the market, you hate to see lows like this get left. And you hate to see it because if this does go long here, you shouldn't be taking it because these lows got left. I'm not going to go long when we're this close to getting that liquidity. So, anyways, we're looking for short. We can't do that yet. We don't have any candles to suggest that we should do that. And unfortunately, with us being so close to the liquidity, you're really not going to want to be taking this anyways because that's what you end up getting. But who knows? Let's try. So let's see if we can short. And this would be contingent on actually getting a retest. Well, let's just do this. We could do this. We could make this the high. Actually, you really wouldn't want to do that. You'd want to make that the high. This is a trade that I would not take, but just for the sake of what we're doing with the fractal timing and us expecting a bearish move from the hourly, let's see if we get that on the 5. And we get wicked out there. So we do end up getting it barely, but it works. And there you go. Do we end up just blasting through it? Yeah, we do. And you just keep going. So that is ultimately how you would use this whole idea of what was the following candle going to do, and then framing that trade on a lower time frame. So that's the concept. When a candle closes outside the prior candle's high or low, that close is giving you the bias for the next one. Start marking it on your own charts and watch how often it plays out. I hope that this all made sense and that you can start to apply these things to your trading to improve it moving forward. If you like this video, please hit like and subscribe. Thank you.